This is ICC Austria does Trade Finance Week. I'm Dipesh Patel, editor at Trade Treasury Payments.
And I am Ramadurai Krishnan, Chief Executive Officer of Global Credit Data Consortium and the ex-chairman of ICC Trade Register.
Today we're talking all about the Trade Finance Registry. Ramadurai, what is the Trade Finance Registry?
It is, thanks for the question, Dipesh. It is the only unique source of information on trade finance products covering letters of credit, trade loans, both export, import, supply chain, and performance guarantees. It has data collected over 20 years consisting of information on exposures, transactions, and obligor related information on these products in terms of defaults and losses.
Thank you. So what is the TLDR, the too long didn't read on the data, and what are the implications of this?
So we collect data and some historical information here. It started because when Basel II came into play, the issue raised was trade finance transactions inherently are low risk, short term in nature. But to prove this, we had to collect data and go back to the Basel Committee in getting what is called the maturity floor waiver, getting what is called an exemption for the calculation of the leverage ratio, where contingent trade products like letters of credit and guarantees, credit conversion factors were applied rather than taking the nominal exposure at 100% CCF. We also subsequently used the data to get favorable treat or appropriate treatment for trade finance under the liquidity coverage rules. Also, please note the register consists of not only short-term trade products, but also export credit agency long-term data on ECA transactions.
So short-term, low-risk, trade finance products and export finance products. But naturally, as all things do, these registries must evolve with the time. So how has the Trade Finance Registry evolved?
Another good question. We have expanded from the traditional trade products of letters of credit, trade loans, and performance guarantees to supply chain loans. It's moved from having 4 or 5 banks to having about 12 banks. It's a mature product. We still have more work to do in terms of closing the entire suite of trade finance products by including receivable finance. Just be aware, receivable finance comes in many forms, but we need to do that to have the entire suite of trade finance products reported under the trade register.
If you don't mind me saying, 12 banks isn't huge. What can we do to increase the scope of the coverage?
We need to have a focused effort through all the ICC national committees in making clear to them that joining the Trade Register Data Consortium is beneficial because it only establishes the fact that trade products are low default in nature. We need to have a concentrated marketing effort. And here I would reference what gain we got from the Prudential Regulation Authority under the Basel 3.1 regulations, where the data collected by the Trade Register with Global Credit Data Consortium and the International Chamber of Commerce was instrumental in getting the credit conversion factor down to 20%. This also helped us to look at receivable finance separately in terms of maturity and keeping the maturity at 90 days. Okay.
Ramadurai, thank you very much for joining us. This is ICC Austria Does Trade Finance Week.
Thank you.